Okay, guys, we are back. We are back. Long time break, but we are stronger than ever. Let's go. Bitcoin update right now. Elliott waves are the kings. So let's start. Weekly time frame. Very quickly. Nothing really changed. Things are still the same as we have left it, I think, 1 month or 2 months ago. So let's start here. Bullish scenario 1. 1, 2, 3, 4, 1, 2, 3, 4, 5. So we are looking at an extension in the fifth wave in blue, which means a couple more all-time highs. Now, the more conservative way to count it is this one, where we have here double 1, 2, a 1, 2, 1, 2, 3, 4, 5. We are looking here at a wave 4, and right now looking up to the wave 5, which means one more all-time high, and then bear market. So either way, we are going to take out all-time highs. These are the scenarios. The bearish scenario would be this one, but it's very low probability. And we already have the top here and looking here for a more bigger move to the downside. But this is not preferable right now. So here we have a couple of scenarios. Let's drop down on the 4-hour time frame because that is what actually matters. So scenario 1, we'll first go over the bearish ones. Is this one, where we count here a top, and from the top we have a 1, 2, 3, 4, 5 in a diagonal. Counting this a wave A, then we preferably count the wave B, a WXY, and I will also explain you why. Because this wave B, if it is not a WXY but an ABC, it becomes more probable that we will invalidate the scenario because invalidation is hitting this high. And with counting this not an ABC but a 1, 2, 3, 4, 5, A, B, C, it becomes much more likely to take out the all-time high, which will invalidate the scenario, which means we would likely to have an ABC here, which is finished at this high. I will already spoiler, this is low probability as we are likely going to take out that high. So this already becomes low probability. Now, the second bearish scenario is the more likely scenario where we have here a double zigzag, a W, X, and we're looking at a zigzag in Y to come much lower. Now, the moment we hit the zero at 7, the double zigzag becomes less likely as wave X is retracing so much to the upside, and we would then be looking not at a double zigzag but a WXY double sideways combination. And then Y can simply be a triangle or a flat, as wave W is already a zigzag. So as long as you don't hit the 0.7, this scenario still remains intact. And if the 0.7 gets hit, we are looking at a sideways combination and then take out all-time highs. So with the bearish scenarios covered, let's look over the bullish ones. So here in the bullish scenario, we have a WXYXZ, or we can also count it as an ABC flat with a diagonal and with C. Although I think this is the more pretty one, as in the flat scenario, your wave C would be longer than A plus B, which is less likely. So here in this scenario, as you can see, the bullish reversal happens at this low, where we count this here as a diagonal in a 1. Then we have here a wave 2, looking at a wave 3, 4, 5, looking for a 3-wave corrective structure, and then the whole explosion to the upside. Now there are a couple of issues with this scenario. First, wave 2 is very shallow. It typically is said that the wave 2's minimum retracement target is the 2A2, which we didn't come close to. So that's a bit less likely for a wave 2 and more likely for a wave B. But we have seen these waves 2s with such shallow retracements in the past. So why can't it happen again? So right here we are looking at 3, 4, 5. Now what is to mention is if you look at this, take from the low to the high of wave 1 to the low of wave 2, we can see that we did not hit the 1-to-1 extension, which means U wave 3 is at the moment shorter than U wave 1, which then means, sorry guys, if we're looking at the wave 5 is not allowed to touch the 1-to-1 from low of 3, which is this one, to the high of U wave 3, which is this one. That's important, because if you hit that, then we are looking at a second scenario, which is actually this one, where we count this not as a 1, 2, 3, 4, 5 correction and up, but we count it as a wave 1, 2, 1, 2, big extension and 3, because then this becomes a double 1, 2. We're looking at the wave 3, 4, 5, 4, 5, and then this becomes likely the top of your bull one, and we see a bear market again. But it becomes, in this scenario, we still want to see a bit of a move to the downside as a double 1, 2, where both of the 1, 2s did not hit the 382. That's very rare. So we would actually like to see a retracement hit the 382, take out liquidity at this low, hit a hidden order block, which is right here, and then move to the upside. As long as we don't see that and see a typical impulsive move to the upside, then we are looking at a potentially triple 1, 2, where we're looking at a 1, 2, 1, 2, 1, 2, or we're then more likely looking at a 5, looking for a 3 corrective move, and then to the upside. So I know I've covered a lot right now, but it's pretty much simple. We are looking either way to take out all-time highs, and there are two scenarios. Scenario 1, this is the low. We don't take out this low anymore, and we are simply moving to the upside. Right? Of course, not in a straight line. We have these corrections and then move up, but we are not going out this low in the bullish scenarios. In the bearish scenarios, we are likely to have a complex structure than a more than a double zigzag, right? Because of 0 to 7. So in this case, you are then here looking at the wave, the triangle in Y or the flat, which means we are likely not to take out this low. So with this in mind, we are looking at strong reversals and take out all-time highs. So be prepared. Remember the bullish scenarios. It's less likely to have this as a wave C of an A, B, C, because on the 1 hour time frame, we have here the 0.618 and 886 hit, right? If we take it from the high to the low, put it at 886, you can see it's not almost hit, it's not entirely hit, but even coming close to this means that a wave 2 or wave B is a wave 2 is less likely, and it's likely to be a wave B or wave X, which means this is corrective, which means we are going to take out all-time highs. It's not a guarantee, but it's a more likely scenario. So with this in mind, now finally, simply observe the correction. If it's corrective, we are looking for higher. Of course, I will update you on that, guys, so see you soon.